Finance Minister Nicola Willis is promising tax changes ahead for charities and closing of loopholes to be announced in next year's budget. Data suggests there is about $2 billion in profit in the charitable sector that is not subject to tax. So charity-owned businesses in New Zealand are exempt from paying income tax, owing it to centuries-old law, I do believe. Critics argue that these businesses, including faith-based entities like Seventh-day Adventist Churches Sanitarium, exploit the tax-free status despite generating significant revenue. Faith-based charities alone reported over $970 million in income last year. The tax exemption applies broadly to all registered charities, including iwi groups and non-profits, provided the profits are used for charitable purposes like education or housing. However, concerns are growing, as I said, about whether these funds are always appropriately directed towards such purposes. The issue of taxing charities has been raised in submissions by the Tax Working Group, with many advocating for the removal of tax-free status from certain entities. Critics like Michael Goumet, who's actually been on the platform, argue that the current system allows organisations to operate business tax-free under the guise of charity and creating unfair advantage over taxable businesses. Conversely, proponents of it, like Interchurch Bureau's chair, Chris Bethwaite, argues that taxing charities would negatively impact the essential services that they provide and often fill the gaps left by the government. So, again, two sides of the coin. Joining me now to walk us through a little bit more, our tax partner at Deloitte, Robyn Walker. Robyn, good afternoon.
Hi there.
Thanks for being available, Robyn. And I mean, we know charities don't pay income tax. What are the other rules or current rules that they also have given to them?
Well, I mean, the biggest exemption is what you've pointed out, is that you're not subject to income tax if you are a registered charity. And, you know, that's really useful in terms of ensuring that funds are available for charitable purposes. And then there is also an exemption from fringe benefit tax for employees that are working in the charitable part of the business. So if you're providing a vehicle or somebody doing that charitable stuff, that you don't have that additional fringe benefit tax that other employers would have. There are some advantages from a GST perspective as well. You can be registered and claim back your GST on all your costs, but not necessarily have to return GST on all of the money that you receive it. So you don't have to return GST on any donations and gifts that you receive.
Robyn, I mean, if I was a charity, I mean, can I, and I'm the CEO of it, I mean, I can pay myself, can't I?
Yes, absolutely. I mean, the key thing is that if you've got anybody that's closely related to the charity, so it might be, you know, a founder or somebody closely related, then it's imperative that they're only paid what is a market amount. So you can't essentially put through a whole lot of excessive remuneration and overpay associated parties. That would create issues that would, I would assume, be looked at by charity services.
Well, that's interesting. So it's market rates. So, I mean, if I was a CEO, some market rates for CEOs, you know, close to $1 million, can I pay myself that as a charity?
Well, I guess it depends.
Well, I mean, you know,
you've got to be a CEO of a large listed company to generally be paid $1 million. If you're a CEO of a small charity with, you know, 5 volunteers working for you, then $1 million certainly wouldn't seem appropriate.
Stand out, wouldn't it? Finance Minister Nicola Willis is promising tax changes ahead for charities and closing these loopholes. Easier said than done, Robyn?
Oh, absolutely. So, I mean, the important thing to be aware of is that, you know, the vast majority of the charitable sector, nobody would have any concern about. They do huge amounts of valuable things that, you know, if the charities weren't doing it, then the government may need to step in and provide those services. And that provides, you know, a bit of the logic of why there is an income tax exemption, because otherwise tax would just be paying for those services. Where there is concern, and whether it's justified or not, that really needs to be investigated, is, you know, where there's businesses that are under the ownership of charities and whether that provides a competitive advantage to them versus other businesses. And there's obviously some concern whether or not, kind of the point that you were getting to before around whether there's sort of associated party transactions where there's something untoward happening which should be stamped down on. I mean, the issue is, can you change the laws to target just those things without creating a whole lot of issues for every other charity? Now, I forget what the actual number of charities there are in New Zealand, but it's an incredibly large number of them.
Like 27,000? That kind of sits in my head for some reason. Could be wrong.
So you don't want to be causing issues and angst for all of those people when ultimately, if you are a charity, if you kind of think about it across, the lifetime of a charity, what it should be doing is it will be getting in money, whether it's running a business or it's collecting donations and getting gifts, and they're getting all that money in, and ultimately it all needs to be applied to a charitable purpose, whether that's relief of poverty, advancement of education, advancement of religion, or something else that's beneficial to the community. All of that money needs to be applied to that charitable purpose. So across the life, you should actually end up in like income equals expenses equals zero tax. It's just whether or not there's a timing mismatch which says, well, if I'm collecting a whole lot of donations now, but I'm not actually doing anything overtly charitable now, I just have plans to do something in the future. So I might say I want to set up an orphanage and I need to raise, $10 million to build an orphanage. It's going to take me 10 years to do it. I'm going to look like I'm just accumulating a whole lot of assets now and not doing anything.
Right.
But I've got this intention that, once I've got enough money, that's what I'll be doing. So
I get it. Yeah. So you're saying, so I'm so there could be some charities that do have quite a bit of money like sitting in a bank or because they've so it's more, when is it going to happen? Are they going to be how do you determine legitimate from the masquerading as a charity, is what you're saying?
Yes, that's absolutely right. And I mean, I'm not sure of the details of what charity services do, but obviously there's a lot of obligations that go on charities to justify and continue to have that charitable status. They need to file returns with charity services, etc. So, there is monitoring there and reporting that is required.
We always talk about, compliance costs, and I wonder if this is, if it's poor lawmaking, does that also risk, dumping big compliance costs on legitimate charities?
Well, that's right. I mean, that's the risk. If you did say, well, actually, let's take out the tax exemption and everybody has to file a tax return, and so you put in all your donations, etc., go in as income, and you claim your deductions and you pay tax on the difference, and maybe there's some way that you then get that tax back when you're doing charitable things, then ultimately you still get to that answer where if you've spent everything on charitable stuff, you shouldn't be paying any tax. And so you're just getting all these compliance costs in the interim of having to file tax returns and sometimes it's not straightforward. It's a kind of like a dead weight cost on society. So it's just a question of, is it worth it to put all those costs on everybody versus to prove or flush out what is the items that you're concerned about.
Because I get it, Robyn, because, having to untangle all these threads might seem too difficult because it's always been this way. But when we potentially could have, I don't know, hundreds of millions, even $1 billion in tax that could be gathered, normally that would excite a tax person like you, would it not? With all due respect.
I don't want to... accountants always after more work for accountants. No, it's just, is it the kind of work I want to be doing? Not me personally. It's not adding anything. It's just adding compliance costs, and actually that reduces the amount of good stuff that charity can be doing. It takes away their own resources if they try to figure it out themselves. All that sort of stuff.